any company with cash today, if you're a business owner and you have cash in your business, first and foremost, cash in your balance sheet is currently, according to the CSO, not me, declining at about 8% in real value because of inflation. And everyone forgets about that fact, but it is a fact. And it means that as a business, if you're planning for a purchase next year, whatever that purchase is, if inflation is running at 8%, unless you've locked in the price, and best of luck doing that in today's market, you're going to pay 8% more for it next year. Well, if you're not getting a return, a similar level of return on your capital, well, then effectively that's going to cost you that 8%. So you can't leave it sitting in cash unless you need it. Now, listen, operationally, you need cash flow. I'm not talking about that. But if you have an excess above operational cash flow, you need to be getting it work for you. So then how do you get it in? It's the same. Well, ultimately, you've no choice. In an inflationary environment, you can't leave it in cash, so you have to get it invested. Why are pensions a fantastic opportunity to hedge against inflation? Because you're getting tax relief. So corporation tax relief at 12.5%, personal tax relief at 40 or 52%. Again, all those numbers are more than 8. So automatically, if you want to beat inflation, getting your money off your balance sheet, getting it into a pension is automatically beating inflation simply because of the tax relief that's available. Now, you have to get it invested and you want to get a return on it. Absolutely. There's no point putting it into the market and getting a 40% getting 40% tax relief and then losing 40%, because then you're back to where you were. But that's all right. You can avoid that, which is sound financial advice. But as a principle, as a business owner, it's never been a more important time to use a pension. Even if you're saying to yourself, because a lot of business owners we talk to will say, I want to do X, Y, and then I'll fund my pension in 5 years' time. Well, I'm kind of saying, yeah, and there's a lot of, I'm not here to say that strategy's wrong. I'm here to say it might not necessarily give you the optimal outcome. If you want to get the optimal outcome and you're living in a period of high inflation, getting the money off the balance sheet into the pension today is going to, in my opinion, is going to yield you far better results in the future, because one, you're getting into a stock market that's very volatile, which means you might be buying assets cheaply. Two, you're getting in at a level of inflation of 8, 9, maybe 10%. If you can offset that inflation increase by claiming the tax relief, well, why wouldn't you do it? And three, more importantly than anything else, who the hell knows what the future is going to look like? So take advantage of it now. And the general principle of getting your money out of the business and into your own name should be the goal of any business owner. And it's about efficient wealth extraction. That's all. So I've always said pensions are important. I've always said they're not the only leg of a wealth extraction strategy, but certainly they're a very important part of it now.